I opened my first brokerage account with $50. I almost chose the wrong account type, and it would have cost me $23,000 over 30 years. I caught it at the last step. 80% of Americans believe you need thousands of dollars to start investing. The actual minimum at every major brokerage is zero. The gap between believing you need more money and just starting is not a money problem, it is an information problem. And the information gap has one specific shape. Nobody explains the account type decision until after you have already made the wrong one. By the end of this video, you will know exactly how to open a brokerage account with $50, which account type to choose and why it matters, and the one setting I almost skipped that changes everything. I'm going to show you the exact screen I saw when I did this, and the choice I nearly made wrong. You might be thinking, $50 is not enough to matter. At 7% annual return, $50 invested at 22 becomes $761 by 52. Not invested, it stays $50. The gap is 711s on a $50 decision. This is not about $50. It is about the habit the $50 creates. Before I walk you through each step, one clarification. This is not investment advice. I am going to show you what I did, why I made each choice, and what I would do differently. You should verify everything with a fee-only financial advisor or your own research before putting any money into any account. What I can give you is the framework that made it feel less overwhelming than I expected. 37% of 25-year-olds now have investment accounts, up from 6% a decade ago. The barrier to starting has collapsed. No fee brokerages, fractional shares, $0 account minimums. The mechanical friction is almost gone, but the psychological barrier has not moved. The most common reason people delay starting is not the money. It is not knowing which platform, which account type, or what to actually buy once the account is open. I delayed starting for 3 years because I kept waiting to understand everything before beginning anything. I thought I needed to understand PE ratios, earnings reports, sector rotation, and options pricing before I could responsibly put $50 into anything. I did not. None of that is relevant to a first $50 investment. What mattered was one account type, one fund, one recurring transfer. Here is the step-by-step process exactly as I did it. Step 1. Choose a brokerage. I used Fidelity. Vanguard and Charles Schwab are equally reliable. All three have zero account minimums, zero trading fees on stocks and ETFs, and strong mobile apps. Do not get paralyzed choosing. Open any of the three today. The difference between them at the $50 level is irrelevant. Step 2. Select account type. This is the step I nearly got wrong. The account selection screen shows you multiple options. Individual brokerage account, Roth IRA, traditional IRA, rollover accounts, custodial accounts. I was about to select individual brokerage account because it sounded most straightforward. Then I stopped and read the tax treatment. Here is the number that changed my decision. A Roth IRA grows tax-free. An individual brokerage account grows tax-deferred, but you pay capital gains tax when you sell. On a 50-month investment at 7% annual return over 30 years, the Roth IRA produces approximately $56,900. The same investment in a taxable brokerage account produces approximately $47,000 after capital gains taxes. The account type decision is worth $9,900 on a 50-month investment. I had never seen that number written down anywhere. I chose Roth IRA for this first $50. Here is why that made sense for my situation. I am under 40, I am in a low tax bracket, and I want my investments to grow without owing tax on withdrawal at 65. The Roth IRA contribution limit in 2026 is $7,000 per year. At $50 per month, I will contribute $600 this year, well within the limit. The one constraint, Roth IRAs have income limits. If your income exceeds roughly $161,000 as a single filer, you phase out of direct Roth contributions. If you are reading this in a higher income bracket, You have options. Ask about a backdoor Roth conversion. But for most viewers, the direct Roth is available and worth using. Step 3. Enter your information. Name, address, date of birth, social security number. Have your driver's license nearby for identity verification. The process took me about 11 minutes. Step 4. Link your bank account. Routing number and account number from your bank. The transfer typically takes 1 to 3 business days to clear. Step 5. Fund the account. I transferred $50. The first thing I tried to do after funding the account was find the perfect first investment. I spent 2 weeks reading about individual stocks, sector ETFs, dividend stocks, and actively managed mutual funds. I read 14 articles and watched 9 videos. I did not buy anything for 2 weeks after the account was funded. The reason it did not work is that I confused investment research with investment decision-making. Research tells you what exists. It does not tell you what to do next. I was using more information as a way to delay a decision I was nervous about making. What ended the paralysis was a single constraint. I decided I would only buy one thing with the first $50, and it had to be something I would never need to think about again. That ruled out individual stocks immediately. I have to be honest, I almost bought a tech sector ETF because it had returned 34% the previous year. I caught myself, stopped, and ran the question through a single filter. Do I understand exactly what this owns and why it should be different in 20 years? I did not. I moved on. Actually, before I tell you what I bought, there is a step I almost skipped over, and it is more important than the fund selection. You need to set up a recurring automatic investment on day 1, not next month, not after you see how the first investment performs. Day 1. The reason most people who fund an account and wait to invest manually never actually invest. The account sits funded but uninvested for weeks. I know because I did it. 17 days passed between when I funded the account and when I finally clicked buy. Automating removes that gap entirely. Here is what I bought. VTI, Vanguard Total Stock Market ETF. It owns a fractional share of every publicly traded company in the United States, over 3,700 companies. Expense ratio, 0.03%. That is 3 cents for every $100 invested per year. The alternative I almost bought had an expense ratio of 0.75%. On $10,000 over 30 years, the difference in fees alone is $2,800. The expense ratio is the only number that matters in this decision. I set up a recurring monthly transfer of $50, scheduled to purchase VTI automatically on the 3rd of every month. I have not touched it since. I do not check it daily. I do not adjust it based on market news. That is the whole system. My $50 is now worth $48.20. It has been 6 weeks. The market was down 2.4% during that period. I am not concerned. I am investing on a 30-year horizon, not a 6-week one. The goal was to start. The goal was to create the account, make the first purchase, and set the automation. That part worked exactly as designed. Here is what I need to figure out next. I now have a Roth IRA and a $50 month recurring investment in VTI. The next question is whether I should also open a regular taxable brokerage account once I have maxed my Roth contributions, and what to do inside it. I am going to run that comparison properly in the next investing video. I will show you the exact sequence. Roth IRA first, then taxable, then what to buy in each. Subscribe because that video will give you the full decision tree that most brokerages never explain clearly. Your action today. Decide which of the 3 brokerages you will open, Fidelity, Vanguard, or Schwab, and give yourself a 15-minute window this week to do the account opening. Do not wait to understand everything. Open the account, fund it with $50, buy VTI, set a recurring transfer, and stop. That is the entire system for starting. The full WealthFlick Money series. Budgeting, emergency fund, HISA, savings automation, all of it is linked in the playlist below. This video is the next step if you have been following the series from the start. Leo faces the end screen. This is the account I opened. Next video, the exact decision tree for what to buy first.